Top of the hour in overtime, but there is a busy calendar tomorrow, Thursday as well, with Amazon and Apple. Concerns around Capex and AI monetization weigh on Alphabet shares. Let's bring in a shareholder, Doug Clinton, founder and CEO of Intelligent Alpha. It's good to see you again. Welcome back.
Likewise.
What's on your mind most? What do they have to do here to get this stock moving again?
Well, I think first of all, they have to get the revenue picture right. I mean, the street's looking for kind of 12, 13% annual growth for revenue. That has to happen first. And then the second piece of it, Scott, I think is more commentary just about what they're seeing in AI. I think you look at the last couple quarters for Google, the thing that's been lacking in my view is just more information about how customers are really using this search generative experience that they've built into search so far and how that competes with new platforms like Perplexity.
Okay, so you think there has not been enough information for shareholders like you on the monetization of the spend and the products in which they have. That's what you're saying.
That's right. Both engagement and monetization. You know, how often are customers engaging with these products? We've seen some reports where it's been like maybe 7 to 10% of queries, but hearing from Google how that's trending, how they expect it to trend, and then ultimately how they monetize it would be helpful.
I mean, I think they're going to be the only of the Mag 5 who are reporting this week that are actually going to have a decline, albeit slight, in their Capex. They're still going to be up like 50-something% year on year, which is kind of the conundrum. It's like you have no choice. The hyperscalers have no choice but to spend, especially when you're talking about the prospects of maybe losing market share in their bread and butter to whether it's Microsoft or some of the upstarts like Perplexity and whomever else.
So, I mean, for us, we've described this as a Pascalian wager for the mega caps, right? You have to believe in AI. If you are one of these Mag 5 companies, you have to invest because the downside, if you miss it, if you miss AI, you don't invest, you get it wrong, it's catastrophic. Google's no longer Google if they don't invest as much as they can here.
The bar's highest this week, in your estimation, for whom?
Probably Meta. If you just think about how the stocks have reacted for this group of companies, Meta's had such a great year. You know, we're looking for kind of 18 to 20% year-over-year revenue growth. It's a big company. I think they'll be fine, but I think that's the one where the bar is really high. Microsoft, I think the bar is a little lower. I think Apple's kind of de-risked.
Really? I mean, it's not like, Apple shares have had a nice move, though.
They have, but I think that what we've seen so far from some of the reports on Apple Intelligence, it's been a little disappointing.
Well, I mean, it's a little early in fairness, isn't it?
It's still, and we kind of knew this. If you follow the Apple story, we know that really the big components of Apple Intelligence are coming next year. They're not in this first rollout at 18.1 for iOS. And I think that the combination of sort of some of these disappointing early results, iPhone numbers have been coming down. I think that they're in a better position to just kind of have an okay quarter and be all right.
Yeah, I mean, we do need some clarity on the iPhone numbers, which seem to be the focal point of all of the debate. What about the broader idea, which was put forth at the top of our program today, that the mega cap trade's back, and it's going to be back for a variety of reasons? You believe that?
We are still believers in AI broadly, so I'd start there. And I think the best way to play AI is through still many of these mega cap companies in the public markets. So we look at our portfolio, for example, in our Livermore ETF. AI is one of our key themes that we look at. TSM, NVIDIA, Meta, and Google are all top 10 holdings in that portfolio. And so I think owning these companies as we continue to see this AI spend makes sense.
No one would dispute that. It's the degree to which they're going to lead the market in the handful of months that lie ahead. Right after taking a bit of a back seat in Q3, feels like that trade is re-emerging.
I think it is, and the reason I think it will keep up is I think AI in general took a back seat in Q3. People were sort of digesting and questioning, where's the value? We keep getting this question, when are we going to start seeing some of the value? I think companies like Meta are starting to tell a story about the value they're seeing applying AI to their company, to their business, with better engagement and with better monetization. So we're getting that value story. I think that's why I can start to work again.
You have both Taiwan Semi and Broadcom in various holdings, whether it's ETF or Deepwater's holdings. What I find interesting, today's news, I'd love your reaction to it. It feels like an NVIDIA take-all world. Yeah. Today's news with OpenAI, doing its first chip with Broadcom and Taiwan Semi, suggests that there's at least the entertainment of competitors to NVIDIA, maybe not in a grand degree, and maybe not today, but there are other players who want a piece of an available pie. Is that fair?
I think it is fair, and the way that we've characterized this, Scott, is if you're an AI company worth over $100 billion, you have to build your own custom silicon. So OpenAI falls in that category. Google's already done it with TPUs. Meta's working on it. Amazon's working on it. I think that if you think about that reality, that these companies do want to create their own processors, who benefits? It is Broadcom to help design the chips, and then ultimately it's TSM to fab them.